Good morning. Good morning. How is everybody doing this morning? Happy Wednesday. It's like, you run a few market postures and then all of a sudden we're almost through January. Time flies. And we're going to give it. Oh, you got press. I'm sorry to hear it. He said he caught it. Um, man, it ravaged everyone in the family had got it. And it was like we all got it right at the tail end of the break. So my kids went back to school and both got sick and probably brought it to everyone there. Nasty. Oh goodness. Sorry to hear it, my friend. Good morning, Barry. Good to see you. Good morning, Bob. Well, we seem light today. Where is everybody? Things are just getting good. Just watched a video from Oxford Club, Bob says, that completely agrees with your teachings. Love it. Love it. The Oxford, I don't know much about them. I've heard the name a few times. Do they produce a newsletter, Bob, or something along those lines? I swear that sounds familiar to me. Okay, well, we're going to jump right in. Welcome to the Market Watch Group midweek check-in. Good morning, Paul. Good to see you. Uh, yeah, I mean, look, I feel pretty good about our analysis overall. And if you haven't seen the futures, and if you didn't see Netflix's adding 13, they really tightened the vice on shared subscriptions. And as such, you know, it looks like that move paid off. We've been fans of communication services the whole time. And uh, hopefully you have at least a trade on in one or the other of Meta or Google. They were hard. Things moved pretty fast coming out, just giving us little flag patterns. Anyways, but Netflix reported earnings. They're set to gap up. And as such, it's got the market in a pretty good place from a future standpoint, which means that the uh, which means that the VIX likely, there's been a couple of times where we were like, markets at new highs and the VIX just is slow to come down. But then all of a sudden, boom, boom, it accelerates and it's very near lows. Let's just get, you know what? I'm jumping ahead of myself. Here's the disclaimers. Here's our agenda. We're going to look at today's opening analysis. We're going to revisit our posture. We're going to talk about our mindset for open trades. What would your open trades be? Well, two possibilities for me. One, you're holding on to some bullish trades. Maybe you took some profit early and you held some to see, hey, maybe this thing can make a run. Because look, what do you know? It's making a bit of a run. Um, right? That's what we've tried to emphasize is even though we've recognized there's a couple of things that have eased, we're still 5.25. That's a very bullish score. Um, so we were still looking for bullish trades. Did we say, hey, we're maybe going to be a little bit lighter on risk, not a full heavy load like we were looking for when we were in those sixes? Still looking to trade bullishly. Maybe you're carrying a hedge trade, and I just saw Bob put a comment in. Yes, right? That hedge will be invalidated if we no longer have the potential for a new hedge. And that's the risk of hedging. Is sometimes we're going to take some losses, but if what you're hedging is now more profitable, then okay, we can live with that because next time we put the hedge on and things drop and we close and we're like, oh, that hedge really helped out a lot. It's a long game. It's a tortoise race, my friends. It's January. We just barely assessed how our hedging. Did anyone have a chance to do that? How your hedging performed in 2023? We'll look to see if there are any setups. I'm going to say there's probably not in our watch list, and we'll talk about trading plans. So let's dive in. Remember, if you hadn't seen it, this is what we are: 5.25 stable. Yes, we saw a little bit of concern here, concern that took us from a 6.5 to a 5.25. And for me, maybe it should only have gone to a 5.5 based on a little bit of a over assessment potentially on the volume. I don't know. If so, it's fine. I'm open to it, but I'm also not going to just be like, oh, what have you done? We saw a little bit of the major market shift when the S&P started to lose momentum and the Dow maintained. We just barely, for the first time, dropped our sector score because we had the financials and not the financials. We had the consumer discretionary and the industrials kind of ease up a little bit. The VIX, there was definitely escalation. I don't feel like we in any way overemphasize that because we're still a one. One is bullish, but we've just been like it's had this weird, and it actually started back here around December. You can see where we were like, that's kind of weird. So from December 17th until now, it's definitely where we're like, what's going on? It's still low, but it's doing this weird little escalation pattern. Let's even start. Whoops. Let's start there. So you can see all of a sudden, look where we are. We're up at this new high. Boop, boop, boop. And it's like, this is where sometimes people are like, oh, now it's like their FOMO kicks in, even though they're late, their fear of missing out. And so they're like, well, am I too late now? Well, yeah. Right. I mean, we were talking about trying to get in back here. Now it's here. So this would have been anticipatory. I know Press took an anticipatory trade, right? I would have been less inclined to trade anticipatory, but still, at a 5.25, yes, you're bullish. At 5.25, you're bullish. So, okay, posturing at this point. We've only got these 2 days. They're a little bit higher, but it looks like we're going to be up in here. So what we had Friday, we're continuing now. But remember, we already scored this higher high. This breakout right here happened Friday. We already scored that on the short term. So I'm not going to score it again. This isn't going to increase my score. Steven said he's 5.5. Okay, there you go. And again, the long term is unlikely to change. It's just kind of moving along. You can see though, we talked about back here. Sometimes when you get this red, like it's going to fall, it just sort of keeps on going. And we had the same thing. Got this red, and now it's still going. Might have a little bit more. May get a pause soon. Honestly, if you look at, I don't know. We'll see what happens. But for me, this trend is fine. Possibly even accelerating. There may come a time where we don't think to ourselves, now if it gets up here, I might actually end up saying, you know what, I just maybe need to raise my line a little bit. I'm open to redrawing the line, but the score is not going to change. If we look at the 6 month, looks very bullish. Am I right? And we're sitting up around a 2. So I think we're in a good place for that. When we look at the volume, the only thing that's likely to happen over the next week or two is negative volume dropping off. The positive volume was last week. Um, so right now we have this we've been calling a wash day. We have a sell day, we have a sell day, we have a buy day, we have a buy day. So it's a tie. I score a tie for the buyers, especially if the selling volume is getting stale. It's not going to drop off this week, right? We get 3 more days. 1, 2, 3. So these 3 days will drop off, and then this is going to be the edge. Yeah. Okay. So the volume, I think we're in a good place with how we're scoring volume right now. Slightly positive. The question is, do we see sector rotation improve again? Meaning, do we see consumer discretionary and industrials kick back into gear? We actually have seen some strength in at least industrials, not as much as in the consumer discretionary. And then the other thing is going to be the VIX. Is the VIX going to regain a quarter of a point? And I think actually it is on track to. So let's get there. Let me get this back out. So here it is. Remember last time we got all the way back to that low, which was around 12.35. And you can see here, we're potentially opening around 12 point. It just kind of held on, and then bam, yesterday you can see it pushed it all the way down. We are basically to these lows. I'm pretty sure that in a couple of minutes when we open, this thing is going to touch even lower still. Why? Because whoops. Where am I? I can't find the window I want. The futures are up 0.5 on the S&P, 0.35 on the Dow, 0.8 on the NASDAQ, 1.2 on the Russell. Very strong open. Oil is up about 0.75%. What's the news right now? A rally in stocks doesn't need to be broad to last. And again, I really don't know what factors. Of course, like they point to the big companies here, right? But that's just a natural um representation of, the weight and the size and the impact. Um, and I think there's way too much in this whole like, oh, it's only the big seven, but the big seven are of course it's the big seven that they're Microsoft and Apple. It's interesting they don't have an Apple logo in there. I don't what these companies are. Wikipedia? What? They have Wikipedia, but they don't have Apple up in here? Anyways, weird graphic. But of course there's going to be disproportionate because they're disproportionately represented. Apple and Microsoft are literally 20% of the NASDAQ and 12% of the S&P. So I don't know. I hope that you have gotten into a place where you don't constantly, because people talk about this all the time and, oh, it's only this. It's not only that. That's what starts that, right? You can't have 7 random small companies start a rally if the big 7 with the size and representation they have on the indices are just doing nothing. Of course that can't happen. Like that just doesn't make sense when you think about it that way. So they have to go first because they're so big, and then everything else gets carried if it's strong enough. And that's what we've seen. That's why is this broad? Look at our sectors. Of course we think it's broad and still do to some extent, right? It's a little less broad, but it's still overall a positive score in our sector score says we see enough breadth that the institutions are moving their money into multiple areas. If it was only technology, we would score a quarter of a point, right? So these are things that we're processing. Another analyst remarked that this is similar to mid last year's fear when investors ran to Mag 7, AI semis, etc. I mean, honestly, if you look at what we have going on right now, employment is in a great place. Let's go to the economic calendar. Actually, let's go back to the VIX for 1 second. Okay, so where are we? 12.46. The low is 12.35. We're within 11 cents of that. And I would imagine it's going to get there. So I guess we'll see. But it is interesting that it's expanded this way, it's back down here this way. So I don't know. You know what? If it doesn't get down there, Bob, I might think, because here's the thing. The time is a factor for sure, right? Because you can see it went up and then back down, and here we are. This is what it looked like last time when you thought about putting the hedge on. So right now, if you're going to carry bullish trades, would you think about a new hedge? And so then it's like, I don't know. I'd have to take it to the model and see what kind of recovery would it have, because as time gets short, obviously theta is a bigger concern. So yeah, it may be better just to kind of eat it. And if you think about a new hedge, think about a new hedge. But it does look like this is going to get down and invalidate the signal. Okay. We're open to it. We'll keep watching it. We'll maybe even know more today. Let's go look at the initial opening response. So you can see we gapped up quite a bit. We're up 0.54. So we had a good start, but the question is, how much follow through do we have, or how much do we give back? And yeah, just because it's red a little bit, we're not like, oh no, the sellers. We're just going to think, let's give it 20 minutes, 20 minutes to establish its opening range. And then from there, we can start to get a sense of what are we expecting if it breaks the range to the upside or if it breaks the range to the downside. Here's a question for everybody. We meet on Mondays and Wednesdays. On Tuesdays, Thursdays, and Fridays, do you find that your routine is similar? Do you find that you do what we tend to do here? Just out of curiosity, right? Do you look at the opening range? Do you watch it establish and see which way it breaks? Let me know if that's something that you have incorporated. Let's get back out. 6 months. And on the economic calendar this week, nothing really happens these first 3 days here. Watch and wait, Fred said, yeah. The leading economic indicators were forecasted to be down 0.3. They were only down 0.1. It's improving. So I'm not really that concerned, but the fact is it is improving. Not looking at much for nothing yesterday. A couple of small reports today that are about to come out. They're not going to have an impact. Tomorrow, though, we have preliminary Q4 GDP numbers. Previously, we were at 4.9. We knew that it wasn't going to run at 4.9. Our hope was that it can stabilize somewhere closer to 3 than 2. But 2 is still growing, right? We'd like to see all we need is GDP ahead of inflation, and we're in a pretty good place. Jobless claims still down in the low, right? This is the last week we were in the hundreds. We don't show concern until this thing gets above 250. So that's in a great place. Durable goods, we don't think much. Inventories, new home sales, that's about it, really. There's a few, like maybe if the sum of everything were very positive or very negative, it could have an impact. Friday, though, we get income numbers, spending numbers, and we get some inflation numbers with PCE. So, but by Friday, we might be thinking, yeah, this thing's coming to an end anyway. So a little bit of negative news and the market pulls back. That's not actually negative to us. That's just the market's taking its breather, getting ready for another potential trading window. So I feel like our posture is going to improve. Not by much, maybe a quarter of a point, maybe a half a point. At least maintain, maybe improve. Which a little bit of, if it just sort of stabilizes around a 6, that would be fantastic for us. I would love that. We'll see what this economic news brings. Let's go take a quick peek at Well, we'll see Netflix in our watch list. So let's get to the watch list. Okay, so Agilent. Agilent was one that we liked over here. I don't know if anyone took any of these healthcare trades. We had a few of them that showed up that really are just sort of failing to advance. So you can see healthcare seems to be a little bit rolling over. Um, they probably, if you got it in this area, it's probably still up a little bit, but yeah, a little bit of a concern there. You can see that the Heiken Ashi has not turned. Okay, Steven tried, but it got away. Well, and at this point, it looks like it may be running out of steam. So, okay, no problem. Glad you didn't chase it. I like that. Apple, you can see Apple. What a phenomenal recovery Apple has made from down here. What are we looking for? We're just looking for a chance at this point. We'd love to see Apple consolidate, uh, watch the sellers run out of steam, find a higher low, and then we look for an opportunity. We have to be wary of earnings because that might disrupt our ability to take the trade. But I'm a fan. I don't, that's the thing, right? Is I don't have to, it's like, yeah, Apple's going to be pulling other stuff. Look at the rest of our list of other things, our software, our chips. Those are moving fantastically well. And Apple and Microsoft, as leaders of the group, it's fantastic for us to see this, right? We don't have to be like, oh no, Apple. It's fantastic. Love it. AIG. Again, this was one that I said I don't think you can take this late. If you got in on the second day, it's up a little bit, but the trade was back there, right? And you want to be thinking, hey, why would I have not? What didn't I like when I had this turning and I had this bouncing off the 50? And it's a stock that we've been watching. What's the thought? AMD. AMD just sort of just blasted off arbitrarily out of this flag. That would have been tough. I think maybe one of you caught this. Looks like it's just sort of running out of steam, meandering around. But if you missed getting out here the first time and it's this close and you're this close to earnings and you see what this looks like, I would definitely be a little bit thinking, yeah, if I haven't taken profit yet, I'm going to start taking some. Amgen was another of the uh, healthcare, and same kind of a thing. Looking to enter somewhere back in this area, hopefully, at least before the end of this, somewhere in the halfway. It's working slow. It still has some potential. Um, Amazon, you can see that the Amazon again. What we had this flag type pattern right back here, where we're saying is this the signal? I mean, it's kind of working out. It's getting close to earnings. I don't know. I wouldn't be surprised if not many of you did this. Let's take a look at the Heiken Ashi here. You did get the signal here. It never turned all the way. Yeah, that's definitely a viable entry. Okay. AXP entries back here, still moving. Nice and slow and steady. Remember, we said with a lot of these financials, if you got into them, you only have a couple of days. This is why am I not before market on Friday. So if you're getting out before earnings, it's tomorrow. So you might be thinking, hey, I'm hoping this thing can get up here to 189 tomorrow, and then I'm done. I'm not going to put it at risk for the earnings. Boeing still dropping. Still dropping. BK, still waiting to see if the sellers are going to move into this thing. BLDR popped and then dropped, but it seems to be holding on, so I'm watching it. BLK, this is another financial. So a few of our financials are a little shaky, but they've gone sideways. They're still trying to find their new trend. They haven't dropped. And then other financials like, well, Blackstone, I said I didn't like because it was too much of a drop. Citi, right? Citi here, anticipatory here, early in the day would be your confirmation. And now what? Now it's moving. So did anybody take a trade on Citi? Um, Let me know. Tried, but it got away. Steven said, got it. Caterpillar. Press said he took Citi, got out on the first blast. Love it. Okay. Caterpillar. uh, I'll tell you, it's probably a little bit remnant when if you had trades that got away from you for losses like due to circumstances, it's easy on the next round to be like, I'm not letting that happen again, right? And then you sort of dial yourself back to the middle. That's what we're looking for. Caterpillar, I mean, you can see it's still kind of on this slight down angle. I like a few of the industrials. I don't think Caterpillar is one of them. Capital One, very much like AXP. Here's oil. Um, Oil not looking good. Steven said just couldn't get filled. I get it. No harm, no foul, right? It's you try, didn't get it, didn't chase it. Now, here's the thing. If we try and miss on like 7 out of 8 trades, we start to think, okay, what do I need to do with my entry process? But if you had two get away from you and then you get in a few more and it's just every now and again, just because you're unwilling to chase, we need to have assessments for those things so that we can say, hey, is this normal? Is this problematic? I would say if it just happens every now and again, it's normal trading. That's it. It's got to be selective. Costco flagging. This last time we went down for 4 days, 5 days, and then we got our turn. We're already 3 days in. It might not even be that one. So yeah. Should we be thinking about Costco? It looks fantastic. Look at the strength. Absolutely, I am. It's a $700 stock. It's going to be expensive options, right? It's just as a nature, but certainly I would want to look for that. Crowd, love Crowd. Crowd gave a signal here, or if not, definitely here. It's trying. It's stuck a little bit, but it's up. So what's the thought? Well, if you got in here around this, hopefully somewhere below 290 is what I would say. I would say hopefully closer to about 286ish or so. It's a nice little pop, but it's stalling at this level. We'll see if it can move. It's Wednesday. No, what day is today? It is Wednesday. Wednesday, possible. We've got some movement in the technology, but what I would say is this on trades like something that looks like this, if you haven't already, I would be selling something, tightening the stop and controlling this trade from here. CSX, we never really liked the way that moved. I'm going to keep watching it though, because it is still well above the 50. Delta hasn't done enough yet. Home builders, we said watch for the earnings, and you can see why we watch, why we wait. It got beat up pretty good. It's stabilizing. What did they? I'm sure they made a ton of money, but they're probably saying like inventories are growing, so they're going to have to shrink their supply. Can't see it. They expected 287, they got 282. Ah, look at that, a little bit of a miss there. So that's likely to throw that off. The Dow still hanging on, still looks pretty strong. Elanco, ooh, here we go. This is turning, right? This is giving us a chance. I like the way that this looks. It's pulled back. It's held this low, starting to turn. Signals turning. Elanco options. Options look a little expensive. It's at 45. It's the low is down here at 30. The high is up here in the 60s. So we're right in the middle, but remember, right in the middle is not low. So and at 45, maybe a spread, 14-15 bull call spread. Something like that. I think the options looked okay. Anyways, maybe I'll put alert info out about this. Fastenal, great off of earnings. This is industrial, starting to pull back. GE, not doing great after earnings. You can see it's trying to find out where it wants to be as a price. Bit of a bearish engulfing candle today. Gold is just sort of sitting along the bottom of that upward trend slope. Google making a little bit more of a higher high. Goldman. Goldman is a funny one. It turned, went up, pulled back. Yeah, I liked Citi and AXP better, so I didn't pursue this one. I don't know. It's really starting to look a little bit sideways more than anything now. Home Depot got to its new high. It's consolidating. If there is a retail stock that I'm willing to trade, consumer discretionary, it's Home Depot is a good one, right? This gave a good trade back here. Now looking for the next one, Amazon. I would say Home Depot is probably that's another one that I would say would be on the alert list to possibly trigger. IBM's slowing down. ICE looking a little more sideways. Intel. Okay, Intel got up a little bit, so I would still be willing to take the next trade. They're reporting earnings tomorrow, I believe. IWM is up. So here's what I would say is good for IWM, in my opinion, is we had almost the development of a consolidation line here. And you can see that we busted out of it. We had a good volume day in the breakout, and we now have a higher high. That's great. That was one of our concerns, was from major market analysis, is if the Russell doesn't continue to show participation because people are losing interest in small caps due to overblown Fed expectations, right? But we can actually see here that this is showing positive signs to make a counter argument. JP Morgan, it turned and then it's just kind of sitting. I don't know. Again, I'm glad I pursued AXP and Citi. Meta, no, I love Meta. Meta keeps running. So communication services as a group, very, very strong. I actually think that's where we maybe want to try to find if there's some smaller companies in there that we can tuck in on, and right, we watch some of the bigger ones for sure in here, but let's see how Roku is doing. Roku, well, we might want to add Roku. Roku seems to be breaking out of its consolidation. So possibly on the next one. So that we'll look for some things in there. Microsoft looks great. Earnings are coming up. We'll see what happens there. Not much for us to trade. Netflix, look at that. Smash and grab. Owners of Netflix loving this. This thing is at up 13%. Really a lot of momentum to distribute throughout the group. NVIDIA continues to just be dominant. I continue to watch it thinking, oh, Scott, just give us a chance. Come on back. PACCAR, another industrial, very strong out of earnings. So there are some strong industrials. It's not Caterpillar or Boeing, right? It's PACCAR. What was the other one we were looking at? looking up at my list. Why am I blanking, you guys? What was the other industrial that we liked? Hmm. Goodness gracious. Terrible memory these days. If anyone remembers, let me know. Fastenal, right? Was that it? Fastenal, Fastenal and Picard. Look at how strong these guys look, right? Real strong. Just waiting for consolidation. It just hasn't come yet. PNC, I liked it. It bounced off the 50, but like a lot of financial things, it's just kind of stalling out a little bit here. So it's moving. The Hike and Ashy are staying positive, but let's be careful. Anything financial, regardless of what you have, I have a couple. Let's be careful with the financials that they continue to give us. We know there's strength in the group, but do we get it on this rally? The Qs look great, just ever so strong in technology. RCL looks like it's just meandering along at this point. RXRX, that's one that gave a signal a couple of days ago. It's trying, all signs are there, just waiting to see if it's going to accelerate or not. We'll see. SMCI, whew, keep on going. Snap, it tried to turn. This one looks a lot like financials, you'll notice, right? Where it gave a signal and it tried to move and hasn't gone wrong, but it's just not quite going right. Trying to be patient, but managing risk at the same time. Here's SPY. We now have our opening range. Let's go take a peek. And you can see that the opening range sold down. So our range is from about 487 to about 487.80. If we break 487, I think there's a good chance that we end up back down here at 485. If that happened, the candle would fill in and it would look like this. So if we break the opening range to the downside, it's going to look like this. And this is going to probably pinch a little bit more, maybe not turn, but definitely pinch a little bit. And yeah, what would we think? We'd think it's looking a little bit overextended, right? That it's looking a little bit overextended. UNP, the signal was back in here. It gapped, but it's just sort of sitting there. And now it has earnings, I believe, in the morning. Yep. So that's it. If you caught it here and it got the gap, you're probably sitting on a little gain, and I would recommend you take the gain and move on. A little bit of a pullback prediction. Here's the VIX. The VIX is down to a low of 12.42. I mean, you can see you're theoretically, is it 7 cents higher than this low? Yeah, but I mean, I don't know. You're kind of squibbling there. So if I were to carry through the weekend, I'd probably hedge it. But as of right now, I'm still just kind of watch to see how is this going to develop. And if the market does go the other way, we could see this reverse, and then it would end up looking maybe something like this. That would be the candle. And we'd be thinking, oh, this does look like it's finding something here with the potential of bouncing. And if it continues to escalate, that's when this could hit up into this area. Yeah, that's a valid concern. There's still potential. I'm not thinking that's what's going to happen. I'm just saying if that's what was going through your mind, I look at that and I think that's in the realm of possibilities. Absolutely. Walmart overextended, looking for a little bit of a pullback. No, Bob, I have shut down the calendars. However, a great time to start calendars right now. A very, very good time to start a calendar when the VIX is low, like it is now, in the 12s. A calendar spread. It's a time spread. Right? It's a time spread. So works well in low volatility. We actually at the end of the options talked about it, if you remember. I think you were there for most of those options classes. If not, take a look. XBI, you can see it gave the signal, but it's really just trying to move, hasn't yet. Looks very similar to RXRX, obviously, because it is in that same vein, right? Biotech. Basic materials, not looking great. Communication services look phenomenal. Financials, oh no, energy looks down and continuing to drop. Financials look strong. Industrials had some recovery, looking better than it did. That's where we're hoping to maybe catch a quarter of a point. Technology looks strong. Staples looks sideways. Utilities looks down. Everything about that sector lineup right there is bullish and increasingly bullish as we see things. Maybe we actually get closer to 6 than I think. Right? Looks good. If you're in bullish trades, we should be looking for these things to run. If you're not in bullish trades, be careful not to chase in. Make sure that you're following your rules for entry. Yeah, I don't think that the hedge is going to show up, but we'll see what happens. Now, this week, for your trading plan work, we are working on. What are we working on? If I can find it. We are working on section. Oh, what just happened? There we go. I'm like, what? The risk management section disappeared. What? It's not responding. Okay, here we go. Section 4, risk management. This should be one of your strongest sections. Do you have real clear definitions of portfolio heat? What is it when it's optimum? What makes it be less than optimum? Where does it, like, what's the range it could live in? Give some scenarios. If 15 is maximum, what would put you where you're taking 12 to 15 versus 9 to 12 versus 6 to 9, etc. Define it. The deeper the definition, the better. Trade risk, same thing. How much risk per trade? Will that risk vary from system to system? Will some have 1%, some have 3%? What's the lowest you'll ever go if you're trying to keep a certain number of trades? The next section is number of trades. How many trades at any given time? Does that number fluctuate? Right? Etc. Risk adjustments. When and how? When and how do you adjust your portfolio heat? When do you adjust your trade risk? When do you adjust your number of trades? When do you adjust how you manage trades? How do you correlate it to current market posture? The more you're just kind of talking through this, it's forcing you to explore it. It's forcing you to be like, yeah, okay, I need this to have more detail. Tsunami indicators. How and when do you hedge? You know that my number one is the VIX. The two secondary analyses that I use would be sector rotation and major market analysis. Both of those have led to hedges before, not nearly as many as those two together are 20% of what I get from the VIX. So it's not much. The VIX is my core tsunami indicator. Have you defined when you would take a break? When would you stop? If you stopped, what would you do to just really say, hey, what's going on here? Is this me? You look at every trade you've taken for the last 10, you assess it, you figure it out, you look at the market a little more, right? You figure it out before you just keep trading blindly. But we don't want to just quit because we've had a couple of bad trades either, right? So we want to make sure that we're very specific in that regard. That's the level of detail. You might even go in and start describing how your risk management will change according to the stages of a trade. We just had that conversation in the Trading Foundations last week. If you go to your content library and take a look, it's in there. But there is a different risk management philosophy as we move from stage to stage. Get that level of detail in there. The more you define this, if you feel like you haven't made progress in your trading plan, it's like, what do you mean work on it, Scott? This is what I mean. Let's really flesh out this plan and give it substance. All right. Fabulous stuff. Got a few things setting up, a few things that hopefully you're still in and still managing. Looking for, I'm looking to put an alert out. Again, it's very informal in the beginning. I'm just going to try to create like a template for Discord, pop it out. What is the template to manage the trade, etc. So you're my guinea pigs, guys. Get ready for it. Make sure you have your Discord open and receiving notifications. Let's try to get that channel built up. Good to see you all. Have a great rest of your day. Tomorrow night, Trading Foundations continues. Then we will wrap up the week with our Friday afternoon session. Have a great rest of your day. And as always, happy trading.